Good afternoon, traders. This is Christian from Hertz Market Trade Group, and it is Monday, June 6th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. Please read the whole risk disclaimer over here. So let's get right to the market and the theme of the day. We had another one of these little bit of gap ups going into the open, as we have known in 2022. That gap ups have been very difficult to deal with. Also, sometimes gap downs. Friday was kind of a gap down, and the market just was kind of uninterested in terms of buyers coming in or just anything more than where the day kind of started off as. There really wasn't much appetite for stocks on Friday. Today is a little bit different, right? Nice overnight session, big overnight moves in the international market, right? Sometimes people forget that when the US markets are closed, right, we will basically have some type of a beta move to what China's doing, what European markets are doing. And that let us off really strong. I'm going to talk about those markets in just a second. But from that point on, you can kind of see that, it was messy. The Qs, it just felt like there was a couple sell programs that washed their way through. One in the morning, maybe one in the afternoon. I don't know, could be a little bit more than that too. But the Qs were down 1.1%. They still finished green for the session, up about 1/3%, but just lackluster price action. Small caps were also down for the day. Micro caps down even more. But the small caps actually outperformed. They just didn't fall as much as everything else did over the session. One of the big stories again continues to be bond yields. I think that really was a contributor to the market selling off over the session. These bond yields moving higher are just not a good thing right now. For the market, they're just not holding in there. And I'm going to talk a little bit about different market participants in this end of day market recap. Just because bond yields go up, right? There's all different types of market participants. Some market participants have a model that basically say when bond yields are going higher, right, when bond prices are going lower. So when we look at TLT or ZB futures, right, so 30-year bond market futures, when the price is going down, right, and that, of course, this is the bond price and yields are an inverse relationship. So this means when prices are going down, yields are going higher. And you can see we're getting very close to this low that we saw in the beginning of May back on 5.9, where this moved, this little bond rally market started. So we're getting dangerously close back to those levels. But yes, there are some market participants, quants basically, when they that are when they see this in their model, when they see bond yields on the long end of the curve, right? So the long end of the yields curve, when they're going higher, right, they're going to do things like sell growth stocks and sell tech stocks, higher valued tech stocks, right? That's in their model, right? And I know some people say, oh, it's the algos, right? It's the algos that are doing it. Well, it's really the models that traders have built, right? And the algos are just are a means of executing the order, right? I know some people think, oh my God, it's predatory. It's the algos that are, it's algo selling. Well, it's based on the model, right, that it's driven from. So that's one player that's out there. There may be other players such as pension funds looking at that relationship and saying, hey, I'm not going to buy stocks today because I don't like this move in yields, right? That's kind of where my head is at a lot of times when I see a move up in yields like we had today. Right. And again, we're looking at bond prices. If you want to look at the yields, we can bring up our screen here, but you could see, and US, you could see this is the change in yields, so it's a significant amount, right? That's, 10 points change, 10 basis points change, right, from here. So we're looking at 7-year up to 3.07, the 10-year 303. 20-year higher, and then the 30-year. But again, you could see the path of the yields over here. All right, so that's a big theme of the day. That's why I'm covering it. When you have a move like that today, you're gonna, tech stocks and growth stocks kind of just spin their wheels, and there's profit taking. So again, difficult trading environment for the day. I want to talk about one other thing too, and then I'll get to my trades for the day. But I try to, like anybody, right? I try to send out, some analysis that may be a little bit different for some people. One of the things that I tweeted out over the weekend on Sunday was just that there's been, and this is right now, I'm looking at a daily chart of SQQQ. So this is 3 times short the Qs, right? And what you see is, of course, the volume over here, and these are the inflows and outflows. So this is money coming in. So if we add up over the week, what we've seen in terms of inflows into SQQQ, which again is the triple inverse Qs fund, it's about $1 billion, right? So, it's really, the scale or the type or the size of the flows in relation to what has previously occurred, right? That's kind of different to me, right? Let's go back. And so again, this was actually the biggest weekly inflow that we've ever seen in the SQQQ. All right, let's go back and look at what transpired back in 2020. Now, I wrote about this back in 2022, more specifically with SDS, which I'm going to get to in a second. But right, when you look at all the inflows that happened, right, and again, we can bring in the Qs here, right, but it basically in March and April, right, speculators were just going the wrong way. So I'm going to bring it up on a separate chart, but you probably know what happened back here, right? So this March, April is where they really started to put down leveraged bets that the Qs were going to fall further, right? What happened? The Q that actually was one of the criteria that I thought was interesting that kind of marked a low in the Qs, right? Was that the triple inverse, the speculators, right? The big speculators. And I hate to break it to you, but a lot of times the speculators are wrong, right? They're on the wrong side of the market. So they were back in March and April, when they were adding the biggest inflows that they had done in a while. You could see, right? This was the biggest inflows. So again, it didn't happen. It didn't happen in here. There's a little bit of an inflow, which they got right. But the majority of the inflows that happened were after the market already went down. Sound familiar? It could. I mean, so I think that so why I'm going over this and why I think it's interesting is because this is, if you fast forward to where we are now, right? It's kind of a similar thing. Now, it doesn't mean that we're going to shoot higher right away. We don't know if there's going to be another round of inflows this week. So it's one of those things that you kind of just have to watch and observe a little bit, right? When I put this out on Twitter, people, it's funny, the type of comments that I got. Oh, does that mean we're going higher right away? Oh, it's because of this, or it's because of the, so many people, they already have their mind made up. Right. My goal when I send out information like this, or when I do the member macro video over the weekend, is to give you news that you can maybe make a new adjustment to what you were thinking, right? Being anchored all the time, right? We call it perma bull, perma bear, right? That usually ends very badly for people because the market does end up changing. Things are constantly changing in the market, right? So if you could pick up on some of these clues, right, you may be able to extract a little bit of edge in the market, right? But if you're just going to do what you're going to do, then why even go on Twitter in the first place, right? And, so let me show you SDS, because the SQQQ got a lot more attention than the SDS, but so here's the same thing happening, right? Right, big inflows, right? So again, these are ETF inflows. The red is ETF outflows, right? So people are coming in, right, at this point, and they're coming in and they're pressing some of the biggest bets that they've had all year long that the market is going lower, right? So let's rewind. Let's go back to what we saw. Right, so you could see, by the way, there just hasn't really been that many flows, right? And SDS is 2 times inverse. Look at what happened back here. After the market are, again, we're looking at this in terms of SDS, which is the opposite of SPY, and I'll bring it up separately so that you can understand. But they started to do this right in here. They started to add their bets after the market already went down. All right. So again, this was on, the big day of inflows started on 326 and went on to about, or if you just want to say, basically to the beginning of April. So let's look at SPY, right? Oh, sorry about that. Well, here we go, right? So this was what did I say, 326? This is when they started to lay down their big bearish bets in the inverse SPX ETF between 326 and 42, right? Now, did that work? No, the market rallied. It rallied right in the face of this. Okay, so again, I'm not making a prediction. I'm just telling you it's a bit similar to me that after a decent move down, right, now that we've got a little bit of a move up, right, just like we had back in 2020, we're seeing big leverage bets come in. All right. So as with anything, right, I would, and this is why we go over for about a half hour and I give a bunch of different factors. My overall take is watch price and trend, right, of what the market is doing, but realize when you have some type of either indicators, right? We talk a lot about market breadth, right? We talk about how the NYSE has been in a bullish crossover with the 10-day moving average, which I'm not going to show here. I do that for members, right? And we talk about that in the Sunday video, right? That has also been, that is also why I've been playing a little bit more longs over the last week or so and have gotten, off of my, plus 90% cash position that I've been holding for the last month in terms of trading. So again, it's a little bit eye-opening, right? That somebody is increasing their bet on being short, the market in here. Okay, so you could take it for what it is, right? That just means that this, just like I was talking about with what quants are doing right now as interest rates are moving up on the long end of the curve. They have a particular model, and the leverage, the super speculative traders are doing something in here too. All right, so you have to kind of put them all together, right, to help you come up with a consensus view. So let's talk about the S&P and levels, right? So now we've talked about a couple factors. Interest rates is one of them. Big leverage bets going up, which is unusual. Now, so what I'm watching for is whether or not we're basically going to get out of this little consolidation here and start to move away from this. So that would be on the positive side. What I'm watching on the downside is the 20-day moving average, right? We really don't have any major signal at this point. We're just, we've chopped around for the last week. Up, down, back and forth, right? So I'm looking for us to get out of this range and maybe even get above the 50-day moving average. That's what I'm looking for. If I don't see that, and again, it's a little, odd that we just could not get above this 41.29 level, which is what I'm watching here in the S&P futures. And if we start to see a move back below the 20-day moving average, I will take off some of my long positions and probably go back to somewhere around 90 to 95% cash, regardless of what those fund flows that I just told you, right? Because price and trend are number one to me, right? And I will be patient. And it could also just mean that we need to get through a little bit more time. Remember, June is a very weak seasonal period of the year, right? So again, you have to kind of use in my opinion, right? Everything I'm talking about is for information purposes in this video, so there's no confusion. But I like to look at multiple factors and come up with a consensus view. So really what I'm watching is for a move to see if we can get above this range, right? To get a little bit more bullish. And then we're going to have to deal with this 50-day moving average above. And on the 1 hour chart, here's what happened with the price action. We got price action got stuffed right at the top of value. And then if we can get out of this range, maybe 4211. right? But even so, if we start moving in this direction, it doesn't mean you throw caution to the wind. I think this year is really specifically about being a very disciplined trader, right? And making adjustments along the way. All right, so that's what I see for S&P. I didn't talk about the NASDAQ or the Qs, but we could certainly talk about that. Similarly, right? I actually thought, I tweeted this out earlier, this chart, and it looked like we got rejected on the 9 o'clock hour. We actually went a little bit higher than that and closed above value for the week. Again, this value area is based on last week's price action, right? And it gives us really good support and resistance levels. But I'm watching for a break above 12,751, a little bit better than what we saw just for this first hour of the day. And then, of course, that got rejected, but we did find support at the bottom of value. So we're just right in the range for now, right? It kind of feels like we want more information. So what could that and small caps look a touch better here. They're above value and they're consolidating above value. So what would that information be this week? Well, one of the good things this week is no Fed speakers, right? The Fed is in a quiet period until the next Fed meeting. FOMC is next week. That's Wednesday. And we get a big CPI report on Friday. So perhaps that could give us some direction. Now we may chop around a little bit back and forth like this around the extremes. So let's translate that into a little bit of a trading plan. For me, it is just selling some strength and looking for quality setups as we kind of dip into things, as we kind of pull back a little bit. So what did I do today? Well, some of the trades that we put on, I liked what was going on. You've heard me talk about the Chinese internet names for the last couple of weeks, right? I've had a couple of these names on. DQ was a great looking trade, right? This name was up 12% today, right? And I had 2 targets to go in my in my swing trade, right? I put this thing on around 48, 49, just a little bit shy of the 200-day moving average, right? I got a real nice move in this thing, right? So that's kind of what I'm looking for, is just to be patient with this market, right? And I took this thing off. I didn't get the very high point for the day, but that's fine. Run was another trade, right? We talked about Run. We talked about ENPH in the trading room last week, right? Both of those trades worked really well. I like this ENPH, right? If we look at the weekly chart, now I know today's just Monday, right? But this is a chart that I tweeted out over the weekend. I think I also tweeted it out last week. Watch this 200 spot 23, right? You get a close above that. We're back above the value area for the year, right? Using this volume profile from last year, when we take about one standard deviation of all that activity, 200 spot 23 is the resistance level that I'm watching. PDD was another name, right? Chinese internet name that I thought looked pretty good, had good earnings, and made a nice move, right? Was up at some point like 9-10% for the day. So what did I do? When you have these big gap ups like this, you sell into the strength, right? So 57, put this on for 51 last week. Very nice looking trades from, so 3 or 4 trades from last week really worked out. I'm not messing around with being greedy in this market, taking that money and putting it in my pocket. All right. CEG, a lesser known power company, right? They do some nuclear, they do some solar. Love that right now in this market. Right? You could see that there's no more history to this company. This is a name that I've been positioning in and out of over the last week. I've been adding on dips, right? So that's part of our game plan, which I went over in the member P&L video last week, right? My game plan is to look for names that are showing relative strength, right? That may have dipped a little bit, right? That are coming into support. Those are names that I want to go after, right? And then I want to try to ride that name as much as I can. So sell a little bit into strength, buy a little bit into weakness, right? Did that last week. So here's CEG, for example. Again, and I love these names that are not as widely followed. It saw some option activity back about 2 weeks ago, right? So I got in this at 63. Where's this thing now? 66, but I've been adding to it, right? I took profits to 65. I added back at 61, right? Again, I added back at 62, right? Love the look of this thing. got a little bit higher than this last peak. Okay, so again, I've taken multiple targets, as you can see in this thing. I took another target today at 66.5. All right, we'll go back to the overall trades. All right, and I did add a couple things, but again, as I mentioned, and this is what we do in the pre-market session at Tribeca Trade Group. We set up the day. What am I looking to do? I said, and one of the things that I said in the pre-market session was I would be a seller today of this strength, right? And then to kind of watch and take a look. Another name that I've been long, which I tweeted about over the weekend, SMCI, right, was up big again, and I took profits, right? So I'm still long this name, right? But I've taken 3 targets in this one. And if it does check back to 53, I'll probably add a little bit as long as it holds the support, right? So that's what it's about right now, is getting familiar with some names. It's very difficult to be in all areas of this market right now because all areas of this market are not showing relative strength. A lot of areas of this market are showing, some strength for a couple days, and then that strength kind of fades and goes away. I did add a couple trades today. This was a name that we talked about last week. Did see some call, has seen call activity basically a couple times in here, and it's a lower price stock. I like what it's doing. I think it could move up to 13, right? That's a decent percent. And then we kind of have to see. That would be a place. This would be an area where I would take a target. This would be another area where I take a target. I added one other smaller trade with Plug. It closed right at the top of value, so it needs to kind of push away from that. My stop will be right below the 20-day moving average. But again, I'm giving this alternative energy group some tries here, right? Looking for some plays here as this move in energy continues. Energy stocks just continue to do pretty well. Big move in nat gas today, was up 9.5%. That actually gets us, basically back to, this is a closing high for nat gas. And the one name that I've been in for about a week or so, which is Antero Resources, continues to work well and grind higher. In my TTG trend portfolio, I'm still long Devon Energy. The refiners continue to act very well. Valero, even though I got out of my swing trade last week, up another 2.4%. PSX, I'm long in the TTG trend portfolio. I might trim some once it gets to 108, but man, these things are acting. The refiners just continue to act very, very well. Dino is another one, just continues to act very well, up another 2.7%. So I could go through, a bunch of other energy names, but they're very similar. One of the things that you could look at too, wrong name. There we go. This is small cap energy. Well, this is $12. So again, a lot of these names that have been showing relative strength. If you look at the performance last week of energy stocks, the XOP ETF was up about 7% last week. XLE, larger cap energy, was only up 3%. So I kind of like this. If you look at the weekly chart, it's not even close to back to new highs. Right, so I think this could maybe move up to 16. That's a decent move. Again, I'm looking at a weekly chart, so I'm not looking for the move to happen overnight. Right, I'm looking for it to take some time, but maybe 16 might be a level where this can retrace all the way back to for smaller cap energy. So again, that's PSCE. Here's our weekend watch list, which I provide clients, TTG members. I also provide the chart setups for each of these. GLNG, I didn't take this trade today just because I'm watching closely what look at that, the VPOC being taken out on the weekly. Right, but this thing has been looking pretty well. It'll be interesting to see what it does on that VPOC takeout, if it can get above that. Something to watch. Maybe that's why I didn't take that trade today. A few other names that I'm watching: Tech Resources. Didn't do that much today. Was up 1%, but holding the move up here. Just a couple other names too. The lithium space has been acting well. ALB, which I was in a swing trade back in here. I took my swing trade off here, right? And now it's kind of it has come back in, found some support, and is starting to move back up again. So I like this group. SQM is the other name that I like in the space. Also hasn't taken out the highs. A little bit weak from where it started the day, but still moving in the right direction. One or two other plays that caught my eye. We talked about MQ. Another tech name, which I find interesting in here, is this DigitalOcean. Again, not the most widely followed name in the software space, and it's in a downtrend. But again, for a trade, let's see if it can get out of this little consolidation in here. All right, I think maybe that's the last name I'll go over, unless something else caught my eye. We talked about ALB. The insurers, right? So last group to talk about. CB, I think, again, not the most exciting name in the world, but right now with rates going up, insurance companies are doing pretty well, right? So here was your last break of the trend line. You got another one here in CB. Unum saw some repositioning of some calls today. I like this name. It's the strongest in the group, breaking out to new highs. All right, guys, I'll leave it there. So again, having a plan coming into today, looking at multiple factors, not making a decision just based on one factor that we look at, but looking at them all together and coming up with a plan, of how aggressive you want to be in this and adjusting, right? One of the things I was kind of looking at a couple trades at the end of the day, but I'm like, I can wait. With bond yields going up and doing what they're doing, playing defense has worked the best right now. Tomorrow is another day to trade. The day trading continues to be there's a lot of ranges, right? So there's no need to force putting on swing trades in a more difficult environment. All right, guys, have a great night. No video tomorrow and Wednesday. Dealing with a death in the family. So just today's video, and I'll be back regular schedule back on Thursday. Have a great night, everybody.